When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Thursday the 12th, and we had the market trading a bit lower here today with the exception for wheat. It is Thursday the 12th. We had an export sales out this morning, but before we get into that, let's take a look at the grain hedge trading platform and see where we closed off the day. Keep in mind, guys, that this is a trading platform that's available for the iPad, the iPhone, any Android devices. So if you have a mobile platform there that you'd like to have live quotes on, go ahead and give us a call at 877-472-4607, or you can visit us at grainhedge.com and take a 14-day no obligation free trial of the platform and see what it's like to have live quotes when you're out and about in the field. So let's take a look here at the daily changes. Corn trading down 1 3/4 cents, soybeans down 1 1/4 cents, and wheat in Chicago here bucking the trend, up 8.5 cents here after hitting lows last Friday. I think what we saw here when you look at wheat is just a little bit of a reversal in the dollar index. Take a look here at the dollar chart. You'll notice that in the overnight session we traded up over at 100. I think 100 is that big hole number, a major resistance level here. We backed off during the trade today. I think that helped out wheat. Not so much that it provided bullish information for wheat, but it provided reasons for short covering. Not only that, but when you look at wheat, you also have a situation here where, like I said, we were just on lows last Friday. We've really bounced off of those lows. We've had very dry weather throughout the plains. That's caused some reason for additional short covering. So what we get here today is just a nice positive move here for wheat, which has been beaten down here for quite some time. But take a look at that dollar, obviously finding some resistance up there around the 100 level, and it's very likely that we may have some selling pressure here tomorrow as people take some profits on these long positions that have really worked out quite nicely really since the end of September. Let's take a look here at export sales out this morning. One thing that you'll notice is that this seems to be a big driver of today's trade as well. Export sales really outperformed for wheat, coming in at 445,000 metric tons. That's on the high side of analyst expectations. We saw that only a 5% decline from last week compared to corn and soybeans, which declined significantly. Corn declined 50%. The export sales this week declined 50% week over week. Soybeans down 66% week over week. Take a look at corn here, 418,000 metric tons compared to expectations of between 600 and 800,000 metric tons. Soybeans only booking 167,000 metric tons compared to expectations here of 300 to 500,000 metric tons. Those were very disappointing. We were trading higher before we got this report out. That sort of evaporated those small gains that we had going into this report this morning, and really we had a little bit of pressure there on corn and soybeans for the better part of the day. And I think that has a lot to do with the fact that though this is just a weekly report, it doesn't necessarily signify any major trend changes. I think soybeans here, there is a little bit of a concern that we're going to really see a drying up of export sales here, which have been really running very, very strong ahead of pace this year. Take a look actually at where we are in terms of meeting USDA expectations. This is soybeans. You'll notice we booked 98% of expected sales here for soybeans. That's very strong. We've booked 47.78 million metric tons compared to this time last year, which is the blue line, of 44.2 million metric tons. So we're well ahead of last year's pace. We are actually we're really closing in on meeting USDA expectations. We booked 98% of expected export sales here by this time. So very strong sales for soybeans, but when you look at that compared to USDA report on Tuesday, USDA did not revise their export sales number higher here for soybeans. That to me says that they anticipate this pace of export sales really drying up rapidly as South American crop comes on and becomes pushed out of the ports and delivered to the global market, really will have a negative effect on export sales here in the U.S. for soybeans. Let's take a look at the cumulative export sales here for corn. We've booked 36 million metric tons here versus this time last year of 38.2. So we are behind last year's pace, but we are well ahead of the pace needed to meet USDA expectations. We saw that revision higher here in last WASDE report. We saw an increase by 50 million bushels here to the export sales item on the balance sheet. So that was very positive to see. Like I said, we're seeing a lot of good movement of soybeans out of the country, and we're also seeing good sales here. So that's all supportive of corn. Unfortunately, this week we just came in shy of analyst expectations. We'll have to see if this starts a trend. I kind of think it should be viewed as a blip in the radar until we really get a reason behind this export sales decline. Other than that, guys, that pretty much wraps up today's show. One thing that is interesting and should be noted here is that there was a Beijing report from the attache out of there basically explaining that the hog forecast for internal hog production there in China is actually going to be less as a result of higher feed costs there, and they expect to increase hog imports by about 20%. So an increase in 20% for hog imports over where they had it at last report for that attache. It's going to be interesting to see how this affects the hog market. The hog market has been trading sharply lower here today, really getting beat up. So this may provide a little bit of buying support, or at least a reason to cover those shorts here in the hog market. Other than that, guys, thanks a lot for tuning in. If you have any questions about what we talked about today, give the office a call. The number is 877-472-4607. And like I said earlier on in the show, take a demo of the Grain Hedge trading platform. I think you guys are going to like it. It's very easy to monitor your positions, execute orders, and view live quotes when you're out of your office. Thanks a lot for tuning in. We'll see you here Friday for the weekly wrap-up.